Hey, what's up, guys? Good morning. It is March 21st. Let's build a watch list here. So last week we heard from the Fed, JP and the boys, and you had quad witch expiration. And you got the disgusting, the nasty, the brutal, the face-ripping short squeeze. Which I think that's what it is up to this point, is a short squeeze, right? Everyone leaning into puts, and the market does what it does best last week and make sure all those folks holding puts get effed up properly. But in terms of structure here, right, 'cause I think the biggest question on everyone's mind over the weekend is the bullish trend back. Take a look at a few things here. And this is going to require a little bit of patience, but I think what we want to pay attention to is whether or not this coming Friday, are we going to get a weekly close above or below the weekly 21 EMA, which your S&P is basically sitting at right now. So here's why this level is important, because if you look at an uptrend, which we've had for up to this point, for like the last year and a half, 2 years, during the course of the uptrend, you're going to get these, bull market reversals into the weekly 21 EMA. You can see it happens a handful of times. Now, in hindsight, it's the ultimate buy the dip opportunity. Reason being is you hold it support, you hold at the weekly 21, and then she continues higher. So in terms of a bearish trend, if you continue to trade and close under that weekly 21, the door's wide open for that trend to continue lower. You don't really you don't kill that potential, downward momentum. You don't kill that path of least resistance being lower until you're trading firmly back above the weekly 21. And if we look at the inverse chart, the inverse weekly chart of the S&P futures, with green 10x bars and a bullish daily squeeze, a bullish weekly squeeze, we'd probably just be sitting on our hands right now, waiting to see if that 21 holds the support, and if it does, we're probably getting long. Right? So the difficulty in that kind of structure would be you load the boat on shorts right here, but then it continues in the path of least resistance, because it stays above that weekly 21. So same stuff here to the downside. So let's see, this coming Friday, if we're under the weekly 21 EMA, just, acknowledge the fact you haven't changed the structure of the weekly chart just yet. Could continue to see lower prices. Now, if we clean up the drawings here and we bop it on down to a daily, another thing to consider here is, we're wildly overbought right now. So that was pretty much just like a vertical straight shot for 1, 2, 3, 4 sessions here. So not only are you coming up on key resistance in terms of the weekly trend, the weekly 21, and I'm showing you this to say, hey, if we can't get through here and hold, in terms of a bearish trend, this is typically where you're going to rally to and then roll over. So if you look back at the, say, an hourly chart, as we're up here at key resistance, this thing's overbought at this point. That doesn't mean we don't continue to rip higher. It just more so means if you're trying to get positioned to the upside, it's probably going to be to your benefit to wait for a dip. A little dip ski, try to get a better entry and try to get better, prices. But at the moment, we're trading a good 4% above the hourly 50. So that's how crazy that move was. So again, I want y'all to see things from every angle. Bullish, bearish, and maybe the third alternative is we go nowhere. Just all things to take into consideration. Typically where folks get trapped, so bull traps, bear traps, or when we get these, straight vertical shots, either above or below, below something like your hourly 50. So typically what happens is we get too stretched to the downside. You trap the shorts and rally back to it. And we've certainly seen plenty of examples of that in this market. So could this be the bull trap? Vertical shot right into key trend resistance, and now you're 4% above that, the hourly 50. Not only that, you're trading 150 or so points above your daily 21. We could continue to rip from here, and I don't think it offers the best entries in terms of trying to play the upside. Again, just things to take into consideration. So here's what I would say. Wait for a decent dip. Then you're trying to anchor to a level of support. So say your level of support is 4,400. Well, if we can get a dip here, then you get support at 4,400, and then you get something like a 15, 30, 60-minute squeeze. That's where you probably got a better shot at getting position and getting long and trying to play a move higher here. Just pay attention to your weekly 21. But in terms of the futures, S&P's flat. The QQQ, which, mind you, has got some room to go here. I mean, in the short term, I'd like to see a dip, but you still got some room here into the weekly 21. Doesn't change this trend. So that's what we got to be patient, right? That's the question we got to answer. Is this your bear market bounce that takes you in the key resistance and then it pukes again after it traps everybody long? Or do we got to bottom? The pullbacks are going to find support and we trend higher. So Qs are opening up pretty flat here. It's like 7:30, so a couple hours before the market opens. The small caps are flat here. They're pushing towards where we would like to short them again. In that respect, look at the Dow. And the Dow was flat near the weekly 21. Big level there, guys. Big level there. A few more things to look at, and then I'm going to show you some of these scan results. And then we'll call it a morning here before the open. So one thing to keep an eye on is also VIX. All right, and we know how this works. As VIX screams to the upside, the market pukes and rolls over. Right? That's your fear. That's your panic. When volatility comes in, typically it's a green light for the market to trap the shorts and get something going to the upside. So now you've got a market that, let's just say in the short term, is a little bit overbought in the key resistance. And now you got a volatility index that we could say in the short term is a little bit oversold here into the weekly 21. So very interesting. Your S&Ps, your Qs, your small caps, Dow, Amazon, Apple, Tesla. They rally back to the weekly 21. VIX gets its full reset to the weekly 21. This continues to trade lower. You got more upside in the market. This begins to hold, and pretty quickly, sometime next week or so, we're back towards like 28. It all kind of, gives VIX a full gas tank here. Very much like you had back here to trigger a nice pop to the upside. So keep an eye on the VIX chart, and then if you look at the put-call ratio, right, we're up here near like 1. Right, everybody's leaning short, everybody's buying puts, and you get the reset. Then you kind of get to the other extreme. Everyone kind of starts leaning into the call side. Typically, at some point, those folks are going to get crushed. And you've seen a lot of back and forth here. Everyone buys a dip, everyone's leaning bullish. Market creams them. Everybody gets a little freaked out, everyone's buying puts. Bears get squeezed out. So keep an eye on your VIX, keep an eye on your put-call ratio. But for me and my style of trading, no level more important here than your weekly 21 EMA. And you could get a dip and find some support and try to play for the next pop higher. I'm just trying to offer you some bigger picture thinking here. Tough to call for the top. Tough to call for the top until you're trading under that weekly trend moving average. Same scoop here, guys. All right, few setups, and then I will let y'all go. So for those of you that are in the mastery, if you check out the room drive, I got the updated watch list with the buy signals and the sell signals posted in the room drive. So I think we've got 12, 15 setups. But for those of you here on the tubes, I'm going to share a few with you. So in terms of structure, that's a crazy rip off the bottom for the semis. And they might be trying to rebuild that daily chart. But again, as a swing trader and a quote-unquote swing trader who likes to play the trend, I can't really look at this weekly chart and want to get bullish just yet. I don't want to get bullish up here into resistance. So let this break out, then we get a pullback, and if it holds, okay, guess what? Now I'm thinking about getting long semis. I still think you got the risk here. You get long under 275, and you get smoked. Energy, on the other hand, there's a good-looking trend on the weekly chart, and you should start printing a brand new daily squeeze here soon. So energy's got the early buy signals. In terms of the sectors right now, it's energy, and it is, let me see, utilities? Actually, it's just energy. For now, energy is the only sector I have with my buy signals, which we're hoping should be out soon. So energy, I think, is a trend to focus on. And if you look at crude oil this morning, this dips to the 50, right? So VIX gets the reset. Crude oil gets a reset. Palladium, another part of the fear trade, palladium gets a reset. And to some extent, if you look at gold, we'll look at the futures, gold kind of gets a reset. Just, again, interesting stuff here. All things to just, right, kind of compile and then put together your ultimate opinion. Then you put together your game plan. With flexibility, of course. But all of like the fear stuff gets a good reset as the market kind of does the opposite. Interesting. But in terms of energy, right, crude oil kind of flushes, tries to rebuild the daily chart. We got early buy signals. If you look at UNG, natural gas, we got buy signals here. If you look at US oil, beautiful daily squeeze with some buy signals. So, good looking group, good looking trend. So a few setups in the group. One is EOG, and we're looking for a push into about 125. So we got a position here in the options room. You got the green arrow buy signal. Good looking stuff. And I think you got a 4 hour. Yeah, you got a 4 hour too. So for now, energy looks good. EOG looks good. Another name here that we have in the mastery is Devon. Looking for a push into 65. And then I think a great option here is MPC. High compression daily squeeze. So these can always be a bit interesting, but it's good. It's good for now. And then I think I like CVS here. I don't think I like it. I know I like it. Good looking daily squeeze. Shift of momentum. We would like to buy it closer to 105 at the 21 EMA. So there's a few setups, guys. CVS, energy. You got some buy signals there for now. We don't have them in Microsoft. And we won't get them until we're back above the weekly 21. For now, we have early sell signals. So I'm being super patient with the big tech stuff. Really trying to anchor to the weekly 21 for the indexes. And then we're taking it day by day. So that's the big question. Is the short side done? Is it time to buy the dips? And if the short side is done here, working with these sell signals, which there's a few more tweaks we've got to do. But playing the downside with the sell signals has been really solid. If it were to all end right now, I think maybe like 3 losing trades playing shorts. So in terms of Apple, that was a nice short. We hit Uber a couple of times. We hit Comcast twice. We shorted Nike. We shorted Snapchat. Had a short on DoorDash. We did have a nice short in IWM back here, because it actually broke the nasty-ass chop fest. And we're still caught up in a short that expires this Friday. Down at 193, we make some decent money. Yeah, I don't know about that. So that might be an L on the current one. And then we had one from a class we did on HCA, which that one didn't work out. And we got one on Intel here for now. So we'll see, guys. We'll see if the short side is done. But in development of these sell signals, these buy signals, with the group trades and mainly outside of the groups, just trying to take as many trades as possible, trying to make some tweaks. And like I said, for those of you in the mastery, the full watch list of the buy signals and the sell signals is in the room drive. And then for the rest of y'all, wish you the best of luck this week. But yeah, for those of you in the group, so we make a few more improvements here to the buys and the sells. Probably going to start upping the frequency of the trades posted, because it's all good stuff here so far. But alright guys, quick recap. Focus on your weekly 21. Acknowledge the fact that until you're trading well above that level, this could be very much like your bullish markets, where you get the pullbacks to the 21, screws around for a little bit, then the trend continues higher. So anchor to that level, and then go into today's session with the understanding that you go basically to the moon in 4 days. you either need a consolidation. So this market could keep pushing. And maybe it does it out of something like a 30-minute squeeze. So you're still pretty stretched here. So that is one option. Hourly chart. Yeah, you're like, what, 4%? 3.5%, 4% above the hourly 50. So anchor to the weekly 21. If you are trying to get positioned to the upside, I think you wait for a dip. And we're taking it day by day. So I hope you all find this helpful. Please enjoy the rest of your week. Trade safe, and we'll talk to you in the next one.